This is Kurt Heisinger, accounting professor at Sierra College and author of Managerial Accounting. This video describes the nature of the budgeting process within an organization, and our focus here is on operating budgets. The one approach is the top-down approach, and the nature of the top-down approach to budgeting is that the budget is driven primarily by upper management, with very little input from other employees within the company. When this approach is used, it's really a budget that is imposed on the organization at all levels. And typically employees resist implementing these types of budgets because they're being imposed on the employees rather than being created using employee feedback. The bottom-up approach to budgeting is really a much more effective approach, and it requires the involvement of employees throughout the entire organization, not just upper management, but everybody top to bottom within the organization. It provides an opportunity for them to give input regarding the budget. It can be time consuming. That's one of the downsides because it requires input from all of the employees within the organization. However, the plus side to this is this bottom-up approach typically increases employee motivation because they were involved in the budgeting process and they tend to accept the budget that they were involved in as long as their input was truly used to create the budget. Most organizations have a budget committee that oversees and supervises the budgeting process. The budget committee is responsible for, among other things, overseeing the creation of the budget and then approving the budget, which is often called a master budget. And the master budget is a series of budget schedules that outlines the organization's plans for the upcoming period. I'm going to show you on the next slide the typical budgets that would be included in the operating budget process for a manufacturing company. Here are the typical budgets that are part of the budgeting process for a manufacturing company. Normally, and by the way, the term that's used is the master budget. Normally, the budgets start with the sales budget. The sales budget drives everything else. If we don't know how many units of product we're going to sell, then it's going to be very difficult for us to put together a production budget and these other types of budgets that you see here. So the sales budget is typically the starting point. And by the way, I have several videos that describe in detail each of these budgets. So here, this is just an overview. If you want to know how the sales budget is created in detail, be sure to take a look at a separate video that describes that. So the sales budget is the starting point, and then from there, the three different production budgets are established. And again, this is for a manufacturing company. So we would be looking at what do we need for production. We would need direct materials. We would need direct labor. We need manufacturing overhead. So all of these are part of the production budget process. Also, we would be creating a selling and administrative budget. You see that over here on the left. That has to do with just our standard operating expenses, things like promotional materials that we might want to create for our company, or ads that we want to produce, or maybe it has to do with the accounting department within our company. That would be the administrative side, but that would all go in the selling and administrative budget. We would also create a capital expenditures budget, and that budget outlines the money that we desire to spend on long-term assets, things like equipment that we might need in our manufacturing facility. So that would be in the capital expenditures budget. From all of this, we would create the cash budget, which would indicate our expected cash coming in and the expected cash going out for a period of time. And a lot of attention is paid to this cash budget because if we anticipate a shortage in cash, we want to make sure that we take care of that shortage way in advance rather than finding out that we're going to have a cash shortage tomorrow and having to scramble to raise the needed funds. Then from all of this comes the income statement budget. The budgeted income statement is what it's often called, and the budgeted balance sheet. So as I mentioned before, be sure to take a look at the separate videos that outline all the details that go into creating these individual budgets.